Joining us now to discuss BTC prices, Matt Williams. He's the head of derivatives at Luxor and Hashrate Index. Welcome, Matt. So with Bitcoin stabilizing, could this lack of movement ultimately put pressure on Bitcoin to go lower later on? That is another theory out there.
Yeah, I suppose there's two different prevailing theories here. One, that we're in accumulation mode and we're hanging out, or two, that we're going to put pressure on and make new lows. Personally, I think we're range bound for the foreseeable future. We've already tested these levels a number of times, and as you've already noted, volatility is somewhat dried up. So, fortunately, I think we're stuck in this range for a while.
What kind of investor activity are you seeing out there that would indicate any trends?
Well, for us at Luxor, we're focused more on a hash price right now than Bitcoin price. Our index is focused on our new launch around our hash price NDF. And so as part of that, we do pay close attention to Bitcoin price, but also difficulty adjustments as well. What we're seeing right now, at least from the Bitcoin price level, is just kind of what I stated already, some ambiguity in terms of, players are mostly standing on the sidelines, kind of waiting to see what happens around these levels.
So you're launching a derivatives based on Bitcoin mining revenue. Maybe you can explain to us what you're seeing so far.
Yeah, so we just launched it yesterday. So basically what we've been trying to do is put together a derivative for the mining community to hedge out their hash rate. So we had noticed a gap in the market in terms of instruments that people could use to hedge their hash rate exposure. And so, what we're seeing right now is hash price has been on a steady decline for quite a while right now. And there's a fair amount of people out there right now looking to hedge their hash rate. And this is the instrument that we provided. And so on the flip side, though, there are a fair amount of people on the buy side of this too that are bullish long-term in terms of hash price. And I think a lot of that has to do with their bullishness for Bitcoin price as well.
We also reported yesterday that Bitcoin mining difficulty was surging 14% to an all-time high, and that requires about 35.6 trillion hashes to mine one Bitcoin. Is there a crunch on mining revenue?
Yeah, absolutely. I mean, we're at or near all-time hash price lows, which is the expected value of your hash rate. And so, with that massive difficulty adjustment we just got, that obviously puts price pressure on hash price, and we're seeing that for sure. So couple that with this range-bound Bitcoin, it makes it difficult for miners to kind of lock in their revenue.
What's your outlook for miners going ahead and trying to survive crypto winter?
Yeah, I mean, it's interesting because we're seeing more and more hash rate come online right now, hence that big difficulty move. So obviously people are still, see the profitability, and a lot of it comes down to kind of what their energy costs are in terms of their profitability. So there's still a fair amount of bullishness in this space. New hash rates coming online pretty consistently, especially with lower ASIC prices. So I think the space, it's a scary spot from a hash price perspective. There's still a fair amount of optimism.
All right. Well, it'll make the survivors stronger if they come out on the other side.